All right, let's take a look at what happened in the ES and specifically trying to just look for accumulation markup, distribution markdowns. That's straightforward. Put that over here. All right. So, and if you saw the other videos on the course, then on the tape reading course, this will be good. All right, and the other thing is, although I use signals, a lot of times you will have signals that are conflicting. You need to be sharp enough to see which one to go with. So there's nothing I can do about that programmatically or anything like that. You just have to know that signals still require judgment. Okay. So over here we had the market go down, right? And then it starts going sideways. So this right here was accumulation. Now, how do I know? Okay, so remember each print here is in thousands. All right. So you have this move down, you have up 4,000, 20,000, 15,000, 11,000. Okay, so that's your high. After this move down, that's your high. After that, you had all of this volume, all of this action here. And then you had some type of, I don't know what to call it, I guess it's a spring or a shakeout, but basically they took out this low. Now, let me ask you this. What do you notice from here to here? From this to this? There's something you're going to notice. Usually in accumulation, they're keeping it within a range. This little tight range is accumulation. Believe it or not, I know we're taught to say, okay, it requires a big phase A, B, C, D, but it doesn't. That right there is accumulating. This right here is accumulating. This overlapping bars, they're keeping it in the range and accumulating here on a spring of the low. That really is accumulation, and it gets proven by this expansion. So taking a look at the tape reading chart, when that happens, you'll notice it gives you an indication about 20,000 shares. I mean, not shares, contracts. Which is the biggest amount in this column, and it's at the low. There's a little bit, only 2,000 below, but I mean, basically it's at the low. You have 20,000 contracts right there at the low. Continues to go sideways. Get another 22,000 gets picked up, 18,000, 10,000, 24,000. It's a lot of juice. All right, from this low to that high, there's a lot of buying. Okay, now it meets some selling resistance over here, and it takes it all the way down. When it goes down, it hits this accumulation area and springs it. Okay. Now here's the thing. You have a base, you have volume, you have a breakout, you have 22, 18, 10, another 24. And then you have this heavy selling, right? You don't know which side is going to win, but if you combine it with the wave chart, you see that you have up, down, up, and then you have this selling, this red bar, then you have 3 green bars and red bar, and then you have the spring. So one of the things you'll notice is when you combine both charts, you'll see that the red is like, it's not consecutive, meaning red, only 2, and green is 3, and red, it's interrupted. All right, so that is one clue. Second clue is it doesn't make a lower low, whereas this made a higher high and a higher low. And the third clue is it cannot close below this low and actually closes above, and then has that thrust or break or reversal to the upside. That's legitimate spring, and it's basically going into that same area of that nice line of accumulation. Now, granted, if you take a look at all this volume, it's a bit scary, because if you're long, you're looking at this and think, huh? Look, big volume. And you're right, like, there's nothing you can say about that. You're right to say this heavy volume, and that's more than the buying volume, but guess what? You know, this was a spring and a shakeout, and sometimes springs or shakeouts, they have heavy volume, and they may have even more volume than the breakout. I don't like to see that situation, but I understand it. In any case, once you have that spring and you're unsure and you think the market's going down, on that high, you know, if it went in reversal like that, you should be pretty bullish, because it took it out. That right there is an indication of strength. Why? Because the entire pullback has been what is it called? Reclaimed or something like that. Whatever, I don't know the term, but this entire selling wave has been taken out, so you have to be bullish. After that, one of the key things here is this heavy accumulation. You know, it continues to hold. You have 33,000, which is the biggest sprint in this range, on a green bar, followed by 66,000. So they're fighting to take it up. And finally it takes out the high. So, I mean, these two prints are really important, because here you have 26,000 pushing down. Demand came in where? At the 22,000. How do you know? Because of the reversal. It came at the bottom of the column, 22,000, and then it reversed up. And it came in 33,000, then 66,000, took out the high with another 29,000. You had a dip offering you the entry, and then it went into markup. Now, when it's going into markup, you have to, I mean, if it marks up, it goes to a level like, what do you expect? So as it's going to the level, remember, supply always comes on the top, demand comes on the bottom of the columns. It's that straightforward. Okay, so when you have 2, 14, 14, 26, 28, and look at this, 47.50 at the top of the column and starts going sideways, that tells me that there's some supply. Now, I'm not saying that's going to turn trend, although it did, right? You can always go higher, right? But this is at least initial supply or preliminary supply or some type of supply came in right there. And it was enough to stop the move and go sideways, and then the 92 towards the end of the day. That's the biggest print, I think, of the day. 92 found over here, sell it. So within that range, that 92 said, we're going down, we're not coming up. So what does that mean? That means as much as this here was the accumulation range, at base and all of that, and made the higher high, increasing volume, all of that, right? This is distributive action right here, and this is markdown. All right, by markdown, I'm using cyclical terms, meaning, the base to the markup to the what's called distribution to the markdown. So it's a base, markup, distribution, markdown. Now, what will it do after this? I don't know, but what I should be looking for is reaccumulation, especially at this level right here. We'll see if it holds, but that level right there. So that's the story. The key here was I think probably like over here on the right hand side of the range after this got taken out. So I mean, either it's going to work or it's not. But as long as you have these nice long, you have long lines of support, you have long. Here's the thing: there's 3 volumes that you're looking at. You're looking at the column volume, you're looking at the row volume. The row volume is volume at price. The column volume is volume of the wave or the column, whatever you want to call it. And then you're looking at the prints and then being able to judge. So that's all she wrote. Thanks. Have a good evening. Bye.